On Monday, something big just happened. The Federal Reserve started printing a massive bailout to private banks across the United States. We're talking about an $11 billion injection into the market, into private banks in order to stabilize them. You probably didn't hear anything about this. This is a warning to you, friends, that the stock market, the markets out there are not as stable as they seem. They're much more fragile, and the banks that you're dealing and doing business with are much more fragile than you could ever imagine. We're going to walk you through some of the numbers of what's going on there in the banking system. And I know that sounds really, really boring and slow, but we'll keep it elementary level. We'll keep it beginner level so it's easy to understand. Complex stuff that's explained easily. And this is a warning. This is something that a lot of the professionals are looking at, but not quite sure what to do with. They are seriously considering their investments in the stock market, and this is why we saw this pullback into the middle of this week. We're going to talk about things like how much cash is in the markets. We're going to talk about what the big banks are doing and what is pressuring the big banks. This has a lot to impact the financial markets as well as businesses. They're hiring and they're firing. This impacts all areas of the U.S. economy and the world economy at large. Let's get into it. Welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade. And these are things you just won't hear in the mainstream media. Sometimes this is a little too technical for them, but most of the time they just want to put a smiley face on everything and tell you everything is just fine. All right, so June 30th, now this isn't some arbitrary date, this is the end of the quarter. The end of the quarter, U.S. banks went to borrow money from each other and nobody would loan it to each other. And they needed cash. They needed cash bad on Monday. As they went out into the markets and tried to loan their assets and get cash for them, nobody would do it. This caused a little bit of a ripple. And the Federal Reserve, knowing that this could happen and was paying attention to this, started printing money. In the early hours of June 30th, before noon, they printed $5 billion and gave it to the private banks. In the afternoon, before market closes, they printed another $6 billion. $11 billion was created out of thin air by the Federal Reserve in order to buy up a whole bunch of assets that the banks didn't want to hold onto their balance sheets overnight, because this is the market close and the end of the quarter. Whatever their books look like at the end of the quarter, they have to turn in to the regulators. And the regulators determine whether or not the banks have enough cash and enough assets to balance out all of their obligations and the debts that they owe. Do you have enough money and cash to pay off all your debts? So, what did they do? To the tune of $11 billion, the private banks couldn't get enough cash to make it look like they're okay. So they borrowed overnight fake sugar money from their sugar daddy, the Federal Reserve. And they balanced their books. They made sure that they had enough sufficient liquidity. That's not what these regulations are for, friends. I mean, can you imagine that you're wondering if you have enough assets for taking out a loan from the bank? And so they're like, well, what assets do you have? So you go down to the car rental place and you rent a Ferrari for a day. You pay to rent a Ferrari for a day. You bring the Ferrari back and then you say, look, I have a Ferrari, to the bank. And the bank says, oh, well, then you have enough assets for us to loan you the money. I mean, that's basically what the banks just did. They borrowed money that they can't actually get. They have assets, but nobody wants the assets. Nobody's willing to give them cash for those assets. So what do you call an asset that nobody's willing to pay for? You call it junk. right? It's garbage. If no one's willing to pay you for the asset, it's garbage. And so they're taking all this garbage over to the Federal Reserve and going, I want you to pretend like this is worth $11 billion and loan us $11 billion overnight, and we'll pay it back to you in the morning. Okay? And we'll take our garbage back. That's what these banks just did. And if you think that that isn't a problem, shady business practices, evasion of regulations, that the Federal Reserve is actually helping them do. The Federal Reserve isn't a government agency. It's a corporation that was created. Its chairman and board of directors are appointed by the government, but it's an independent agency, supposedly. It's sort of like a non-profit, supposedly, but it has the power to just conjure money out of thin air. And they have conjured quite a bit of money out of thin air. At one point during the COVID crisis, we got up to $9 trillion worth of assets that they had bought up. They conjured all this cash and they bought up all these assets. Stocks, bonds, lots and lots of treasury bills to stabilize the markets. They injected all this cash in there. That way the federal government could just give out money to everybody. Money for you, stimulus checks for you, stimulus checks for you. Of course, there were like little stimulus checks for everybody, but then there's like these massive corporate bailouts going on to the corporations. So, Steve, is this something that happens every quarter? No. No, it's not. The last time this happened was in 2019, before the COVID crisis. So before the COVID crash, they were injecting liquidity because the banks didn't have enough cash. And that led up directly to, boom, the stock market crash right before COVID. Now, granted, there was reasons for COVID, and with a stock market crash, there are always reasons. But see, sometimes there are reasons, but when there's enough cash in the system, there's no crash. Other times there's a reason and there's no cash in the system and it crashes. And what we're seeing right now is that the Federal Reserve and the banks are indicating to us all that there's not enough cash in the system. So there's lots of asset value, but not cash. That means assets are overvalued because they can't be bought with the cash. Nobody has cash to buy them. So if anyone starts to sell those assets, nobody has the cash to buy them. That means that basically all the cash has been thrown into the assets, so much so that we're short on assets. So, I mean, the U.S. government thinks this is great because it just keeps printing, borrowing money from the markets. But now it's starting to see that there's a problem. There isn't enough cash out there for the federal government to soak up. Friends, what I'm saying in short is that something is breaking in the markets, in the banking system. When there's not enough cash in the system, it's sort of like when your engine doesn't have enough oil. Drain the oil out of your car engine and start it up. Tell me what happens. Things start grinding together. It may work for, a moment or two, but pretty quickly, the whole engine is going to crash. In the same way, if you don't have enough cash in the system of the banking system, everything starts to go absolutely horrifically wrong. Because some bank out there is going to be like, we need more cash, and no one's going to loan it to them, so they're going to have to start selling stuff. But they can't sell stuff because nobody has any money to buy it with. Now you're going to say that there's money out there. Well, sort of, but everybody doesn't have money, they have stocks. And a lot of people have borrowed money and spent it on stocks. So they have not only their stock portfolio, but they've leveraged up by borrowing money to buy more stocks. So not only do they not have cash, but they have negative cash. And you have lots of people, lots of banks with negative cash. It doesn't appear that way at first, but when they've borrowed money to buy assets, they essentially have negative cash. So if you're picking up what I'm putting down, once people have to start selling, getting rid of assets in order to get cash, and there's not enough cash for the assets to be sold, everyone's going to get tighter with their cash, which means they're not going to buy, which means the asset values can drop dramatically before those buyers really seriously are going to buy. That's called a crash. That's a stock market crash. It's a everything crash. And this is what we're facing right now, and this is what we faced on June 30th. The banks went to the market to get cash and they couldn't get it. And they went squealing to the Federal Reserve, we can't get cash, we need it before market close or else we're toast. And the Federal Reserve said, got their little checkbook out and started writing out checks. $11 billion in one day. Now, over the last several years, we've had all this cash flying around because of stimulus this and stimulus that. And the Federal Reserve has slowly been getting rid of its assets. And like I said, they take money out of the market, give them the asset back, and then that money gets disappeared. It's them pulling money. They've pulled $2 trillion of cash out of the markets in the last 3 years. In 2022, it hit a peak of $9 trillion of assets, and they've quietly pulled $2 trillion of dollars out of the markets and disappeared it, retired the cash. And they continue to decline the amount of cash in the markets. They're quietly drying up the market, draining the oil out of the financial system to do exactly what they did right before COVID. They set everything up for a market crash, so it would crash on President Trump right before the election. Yes, Steve, that's conspiracy theory. The Federal Reserve set up President Trump to have a market crash as the election was really getting going. I don't see how you can play it any other way. Now, people are going to be like, well, they couldn't have predicted the COVID, blah, 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 blah. Well, if COVID was completely natural and didn't come from a lab, wait. Well, COVID originated in a country that is friendly to the United States and doesn't want to sabotage the United States, in which a country that President Trump has great relationships with. It was China. Put the pieces together, friends. Put the pieces together. This was a massive hatchet job on President Trump, and they're setting up to do the same thing. Are they going to release another virus from a lab? I don't know what they're going to do, but the Federal Reserve is draining money out of the markets, draining out of the banks in order to set things up for a market crash. I don't know what the trigger point will be. It's probably going to be something surprising, but they are draining the oil out of the system, and that is setting us up for a catastrophic market crash again. If you thought that the crash that happened right before COVID was bad, it was. It was instantly bad, but then the Federal Reserve started printing money like nobody's business. They printed so much money that even now, after $2 trillion pulled out, we're still we're $2.5 trillion more in assets at the Federal Reserve than what we started with before COVID. They printed $5 trillion over at the Federal Reserve and dumped it into the markets. The U.S. federal government borrowed a lot of that and borrowed a lot of that from other people too in order to give out massive cash to corporations and the ultra wealthy. I had the pleasure of being a tax accountant during these years, and I saw the cash going out. And I remember attending a conference with my mask on where they were talking about the bailouts and all the money that was being distributed, right? And I remember he said that we've been assured by the federal government that there will be very little oversight, that there will not be repercussions. So, if in doubt, apply for the COVID loans, because a lot of them are going to be forgiven. And if in doubt, just go ahead and take the money. That's what these professionals, high-level accounting firms, were being told by the federal government. Just take the money. We'll sort it out later. And wink, wink, nudge, nudge, we're probably not going to sort it out. And that's where we are to today. Massive amounts of cash, trillions and trillions of dollars were handed out and just given to whoever filled out a form. And most of these corporations were able to pull in a lot more than your stimulus check. I promise you, a lot more than your stimulus check. They brought in so much cash that a lot of these companies had a great year. A great year. Made lots of profits for their for their owners and stockholders. What's going to happen next? Well, that almost crashed the entire system. Printing that much cash, the inflation that we suffered in the last couple of years has been off the charts. But friends, it's just going to get worse. If we have another market crash and the Federal Reserve steps in and starts printing money like nobody's business again, we're going to see a fundamental shift and a fundamental change in the United States of America. These people that want to crash the great ship of the United States, they don't really care about the policy so much as the spending, because the spending is what's going to bring the United States to an end. And they believe that they will be around to pick up the pieces of what's left of the United States. Friends, if you're in the stock markets, if you're in the bonds, I'm just warning you. I'm just warning you what is happening. Just like the logistics telegraph what the soldiers in other countries are going to do, the plumbing and the financial system in the United States tells us what the stock market's going to do. That's why I've been warning. I've been shocked that things have gone as far as they have, because people are just so willfully ignorant of what's happening, and people have been dumping their life savings into the stock market like nobody's business in order to bail things out. And they've put enough in that hedge funds and all these big Wall Street firms have also been like, you know what, we can't fight it, so let's just get in on it. They're all in. But believe me, they are ready to pull out at a moment's notice. They are ready to pull their money out so fast from the markets because they know that this is unsustainable. Whereas the retail people, all the normal, ordinary people with their little brokerage accounts, don't realize that. But the big banks, the big investment firms in Wall Street know that the liquidity, that the cash in the system is very low, and that they need to be very, very careful. And they will be careful, I promise you. They will be getting out the instant they smell a little bit of trouble. They're going to be getting out. So, as we go into this week, we have massive tariffs that are going to be kicking in later this week. They're going to be announced as this week goes on. We've already had a bunch go out. That's not going to do well for the market. And as we see a pullback happen, you're going to see those banks and those investment bankers pull out their money pretty quickly. We could have a liquidity event this week. Am I calling a market crash this week? No, but is it possible with the way things are right now, with the banks not having enough cash for quarter end? Yeah, it could happen. It could happen this week. So friends, please protect yourselves. Think about switching over to other assets like gold, silver, or platinum. That's why we talk about Genesis Gold. They really can help you out. I'll put a link right there on the screen for you to find out some more from them, Genesis Gold Group. If you want to check out another video from this channel, there's one right up there. Thanks so much for watching. Steve Poplar of the Poplar Report, out.